Hi guys, how's it going? Thanks for joining me for another video. Today I'm going to be discussing a topic that I know quite a few people invest in, and it is an investment strategy that I work on a lot myself. Today I'm going to discuss whether dividends are still a viable form of investment, especially with everything that's gone on in the world this year. A lot of dividends have been cut or suspended or cancelled for a lot of reasons. Yields have dropped. So I'm just going to go into a bit more detail and just see whether or not dividend investment is still a viable way of making money, or whether we need to look at alternatives. So as you might know, since about April this year, a lot of FTSE listed companies have either cut, cancelled or suspended their dividends. This has made a lot of investors assess their portfolios just to try and work out whether or not dividend investment and dividend payments is still a viable form of investment, or whether or not this is going to become sort of a secondary or tertiary investment style, with most gains and growth coming from other sources other than dividend payments. And depending on how things go, this could have a positive impact on the companies themselves, as they'll be paying out less or no dividends, which allows them to reinvest more capital into the company, which can help it grow, which is something we don't see a lot of in the FTSE, but you see a lot more over in America in the S&P 500. It is looking like dividends are starting to come back from those companies that did cut or suspend theirs earlier on this year. Now that a few have started to reinstate dividends, I can see a lot more companies, if they are in a position to do so, will start to reinstate their dividends as well. Especially some of these companies that are known for paying dividends. People invest in them for them, and if they stop paying them, then that could cause investors to sell and get out, which is going to be detrimental to the company, and paying out a bit more profit in the dividend might be sort of the lesser of two evils. But a lot of this is going to depend on how national and international economies recover. This is a worldwide thing, so we need virtually the world's economy to pick back up again before a lot of these companies can do that, especially with the sort of international companies. Yeah, they might be headquartered in the UK and FTSE listed, but they could have a lot of income coming from America, from China, from Africa, from Russia, from South America. Income can come from all over the world, so this is a sort of worldwide economic thing rather than just a UK economic thing. And as I said before, some companies are invested in purely as a dividend payer. So I believe with some companies beginning to repay dividends now, it's going to put pressure on those sorts of dividend aristocrats, or companies that people want a dividend from, and there could be some pressure from investors and shareholders to start paying those dividends. If one company is doing it, what's stopping someone else from doing the same? So talking about the big companies that have started to pay back, I've got a few companies that are either have reinstated the dividend, have continued to pay a dividend, or companies that are looking to bring it back if they can. And just go over a few of those, and some of these are bigger names than you think, all in different industries, which is good to see that the whole sectors are recovering. It's not just in individual circumstances. So then, the first company I want to look at is Aviva. Aviva are a large FTSE listed insurance company. They had announced a dividend earlier this year or last year, can't remember exactly when it was. However, that was suspended, and subsequently since then they have reinstated the dividend and they have paid it, albeit at a much lower level than what it was at, but still it's restarted to pay the dividend, which is good for investors and for the company and for probably the general economy as well. So the dividend was originally suspended back in April. It was scheduled to pay 21.4 pence per share. However, like I said, that was suspended back then. Come August, they announced they were going to reinstate the dividend. However, it's only paid 6p per share, which is quite a big difference, 3.5 times smaller, but it's still a payment and it's showing progress and everyone moving forward, which is always good to see. Hsbc is another company, a big bank, obviously headquartered over in Hong Kong and Shanghai, but the 6th largest bank in the world, I believe. So it's got its finger in a lot of pies around the world, shall we say. So it's good to see that Hsbc have announced that they want to reinstate their dividend, which is good for me because I own quite a chunk of them. So I'd like to see the dividend getting repaid again. However, with everything that's gone on in the world recently, and when Hsbc announced to cut its dividend, it did make Hong Kong shareholders sort of panic and they did sell off a lot. And I think that's been reflected throughout other stock markets and especially in the FTSE since the beginning of this year, January 2nd, when the market opened, we're down about 46%. So does this make it better value to buy now if they are going to be reinstating their dividend? Fortunately, when I bought them, I'd bought them last year, so I've lost quite a bit of value on them, but obviously I can cost average this down if they do reinstate a dividend, which is going to make it even better value for me to buy back into. However, they haven't announced anything as to what sort of level of dividend they'll be paying or how much it will be. So even if they do reinstate a dividend, it might not be, a very big one. It might be a very small sort of yield return based on the value. However, if they do pay anything, paying something is better than paying nothing. And this is the first time in 74 years that Hsbc has actually cut its dividend, which is obviously a very big thing for the company to do, and it seems like it's not something the company wants to be away from for very long. So Royal Dutch Shell is a company that didn't actually cancel its dividend. It still paid its dividend. It has drastically cut it down based on what it was paying previously. But now it's decided to increase its dividend. It's increasing it by 4% based on its better than expected earnings. However, these still aren't particularly good. So is this the best time for them to be increasing their dividend? Obviously, Royal Dutch Shell is one of those companies that people seem to invest in just for the dividend. So obviously reducing it as much as what they did is quite a bad thing for them. So obviously they are showing signs of wanting to increase it. Whether now is the right time for that is questionable, especially with the oil prices being up and down as they are, mainly down because of demand with everything that's going on. This probably isn't the best time for them. However, on the upside, this is another company increasing their dividend, which is a sign that companies are recovering. They're in a better position to pay out money, and in Royal Dutch Shell's case, they're in a position to even increase what they're paying out as well. Obviously, we're still a long way off what they were paying, sort of this time last year, but increasing the payment is increasing the payment. And the last one I'm going to touch on is Lloyds Banking Group. This is in the same sector as Hsbc, but obviously with Lloyds, since the financial crisis in 2007-8, they haven't actually paid a dividend. They'd recently reinstated their dividend in the last couple of years, even though it was only small. And now what's happened is they've had to cut it again. However, Lloyds have also published better than expected results. Obviously, there are a few ins and outs with Lloyds because it's got quite a big loan book. I think the sort of bad debts they were going to write off are smaller than what they were going to do as well. So obviously, all in all, it's a better result for Lloyds. It's still not great. It is still quite bad, but it's better than expected, which is obviously progress and things are moving in the right direction. However, talk of them reinstating their dividend obviously would be great for Lloyds. Get the dividend repaying again. Obviously, again, well, from my point of view, when I was first investing before the financial crisis, banks were the big payers. So if we can get the banks back up to where they were, that would be great to see. And obviously, it's more beneficial for me because I own, quite a bit of stock in quite a few of the banks, so paying a dividend would be very beneficial for me, and hopefully it's beneficial for everyone else who's held the banks for that long and just waiting for them to recover. But if they are going to reinstate the dividend, I can see it being probably 2022 before they start doing that, or the back end of next year. I can't see it being early next year, mid next year at all, just because I don't feel like they are in a position to start doing that. I hope they prove me wrong, but I feel like it's going to be 2022. So with all that said, there are only 9 FTSE 100 companies that have reinstated a cancelled dividend. So in terms of a percentage of the sort of whole market, it is only quite small, but there were those companies that never cancelled it, they only just reduced theirs, and that's not included here. There are a further 25 FTSE 250 companies that have also reintroduced and paid a dividend this year as well, so that's slightly better progress, but obviously the FTSE 250 is a bigger market. All in all, these are only small amounts of companies that have started to repay. However, I feel like it's one of those, as one company starts to do it and then another one does it, and then it's just going to sort of snowball into a process of companies that can start to pay will start to pay, and those that can't will probably announce something just to say that they won't be, and hopefully these dividend companies can start paying a dividend again. It's why people invest in them, so I feel all in all it's going to be better for investors, for the companies, for the economy, if companies that have paid dividends can be in a position to start paying again. One thing I don't want to see is too much pressure from investors to start paying dividends. I don't want people to start getting greedy. If they do and their company starts to do it just because of this pressure and they're not in a financially stable enough position to do so, this is going to be worse for the company. And the last thing anyone wants to see is a company fail because they've had to pay out too much money. I would rather have a smaller yield, a smaller return and a safer investment than have a lot of money pushed out to line my pockets just for the company to collapse. So all in all, there were 445 cancelled dividends from companies listed on the London Stock Exchange. This includes the FTSE 100, 250, 350 and the AIM markets. So from those companies, most of them were AIM listed companies, with 139 of them cancelling, with a further 108 from the FTSE 250 and 50 from the FTSE 100. That's half of the FTSE 100 cancelled the dividend this year. That's not good. In my view though, I can still see dividends being a viable investment strategy. It is still something I'm going to do. I've done it for a long time now and it's something I'm going to continue doing. It's always done well for me. Share prices go up and down, yes, but it's still paying a dividend. I'm still getting some income from it, which is good, and I don't have to worry so much about the fluctuation in prices. If I was trying to make money from growth or from trading, then I need to be focused more on the price, and to me that's it can go wrong sometimes. So perhaps those big yielding companies of yesteryear have gone. The yields will come back. I don't feel like they'll be as high as what they were, but the USP of the FTSE was always that it paid higher yields than other markets, and I feel like it will do in the future, albeit potentially not at the same level it was. But looking at statistics, it's looking like the yields still are good. Obviously a lot of the prices have come down a lot from where they were at the start of the year, so that's going to have some impact on the yield, but it's looking like the yields are somewhere where they were sort of this time last year as well. So with all that said, I'd like to thank you for joining me for the video. Please remember, I'm not a financial advisor. Everything in this video is my own opinion, so please do your own research if you do choose to invest in any of the companies I've mentioned or any other subsequent companies that you think may or may not be a good deal based on any sort of future yields or share prices. So remember, I'm just a guy posting my own opinion on YouTube, So if you do need any help, please speak to a financial advisor, a stockbroker, someone who can give you professional advice. But with all that said, I hope you've enjoyed the video. I'd really appreciate you just clicking that like button if it is something you've enjoyed. That will help spread this video to other people who might want to see it, and we can help someone else along the way. If you've got any comments about any of the companies I've mentioned or other companies that I should be looking at based on what I've just discussed, please let me know in the comments below. I'm always happy to look at a new company. If you look at my investments, I've invested in so many companies because people have told me it's good, and I've looked into it and it has been good, and I've invested in it. And also remember, if you want to subscribe to the channel, that'd be great. If you click the notification bell, you'll be notified every time I make a new upload, so just to make sure you don't miss anything. So once again, I hope you've all enjoyed the video, and until next time, learn, invest, success.